Oil prices have stabilised after falling nearly 2% as major shipping firms began using the Red Sea maritime route, despite Yemen's Houthi attacks this week. Though investor concerns about shipping have eased, markets are still on tenterhooks over increased tensions in the Middle East. Brent Crude futures climbed 0.3%, with US West Texas Intermediate also up 0.3%. Danish shipping firm Maersk has said that it has scheduled several dozen container vessels to travel via the Suez Canal in the coming weeks, improving investor confidence in oil stocks. Analysts expect oil demand to rise after growing expectations that central banks, such as the US Federal Reserve, will begin cutting rates, will lead to reduced borrowing costs. Let's get more on this now with Han Tan in Dubai. He's Chief Market Analyst for Xinity Group. Good to have you back with us, Han. Investors have been concerned about rising tensions in the Middle East, but given that oil futures have fallen slightly, how would you describe those concerns at this stage?
Right. So I think those concerns are still warranted. Look, as long as there's a war in the region that still threatens global oil supplies, I think markets are forced to at least bake in some amount of geopolitical risk premiums, right? Now, I think having said that, also from a fundamental perspective, you've got a weaker US dollar on bets that the US interest rates will move lower next year. So I think overall, we should see a limited downside for oil prices in the near future.
Yes, as we've been discussing, there are expectations that central banks will begin cutting rates after more than a year of aggressive rate hikes. How likely is that at this stage, given that there's still so much uncertainty with both shipping in the Red Sea and conflict in the Middle East?
Yeah, I think to be clear, the base case going into 2024 is still for US interest rates to move lower. Because keep in mind that the Fed, when they look at the inflation outlook, they look at those stickier, those core inflation drivers. I'm talking wages, I'm talking housing. The Fed tends to pay a lot less attention to more volatile prices from food or energy or oil prices, right? So I think the Fed should be allowed to, or should be able to stay the course with its intended rate cuts for next year, barring an outsized shocker that really sees a resurgence in inflation.
Okay, Han Tan, always appreciate your analysis. Thanks again for joining us. Now to other top business stories from around the world. Japan's factory output has fallen for the first time in 3 months, further complicating the Bank of Japan's monetary policy outlook. Industrial production declined 0.9% in November from a year ago, driven by a slowdown in the manufacturing of cars. Meanwhile, a separate data showed retail sales were up 5.3% during the same period, thanks to ongoing inflation. Apple is resuming sales of its Series 9 and Ultra 2 watches in the US after an appeals court suspended a ban imposed by the Trade Tribunal. The International Trade Commission found the tech giant infringed on blood oxygen saturation technology patented by the medical device maker Masimo. Apple had pulled both devices from its website and store shelves after the decision. And the New York Times has filed a lawsuit against OpenAI and Microsoft, alleging the unauthorized use of millions of articles to train AI chatbots like ChatGPT and Bing Chat. The Times claims these platforms undermine its journalism investment, seeking damages in the billions. The lawsuit demands the destruction of chatbot models using its content. OpenAI and Microsoft argue fair use.